Folks, welcome to Smart Living. Sitting next to me today is Renee Fritton. I had her on last week where we basically talked, we shared a little bit about personal lives, and we went to grade school together. But Renee also was the vice president of sales at Experian and has recently left that position. But she has over 30 years experience when it comes to credit. And credit history, credit reporting is very important in terms of being able to do things in this society. So I am glad that you're coming on to explain to us how important this is. But one thing I know is that you love to talk about history. So I'm curious, credit history, how did it come about our society? And welcome to the show, Renee.
Thank you for having me again. So I am very passionate about this because I find it fascinating when you look at how important something is today. How did it become what it is, right? Mm-hmm. And credit reporting, if you rewind the clock about 100 years, and I'm going to establish a little credibility on this story I'm about to share. When I started with TRW, it was in the mid-90s, and I worked with an affiliate of TRW, and they were celebrating their 100 years. So the affiliate was Credit Data Southwest, mm-hmm. which was founded in Phoenix, Arizona, and they covered Arizona and New Mexico. And they essentially started gathering data about how our grandparents and people in the late 1800s, early 1900s paid their financial obligations. So I was working on this 100-year celebration and found an archive of an actual credit report that looked like a card, card catalog, right? Uh-huh. Index card. And it had John Smith, 123 Ranch Route Road, whatever. And there was, the financial obligation, and it said WAD.
Okay.
And so I went into Clark Huber, who was our president at the time. I went into Clark's office and I said, Mr. Huber, help me understand, what does this mean? And he said, well, before there were credit scores, people, kind of made an opinion, good or bad, about how you paid back your financial obligation, which, maybe Mr. Smith borrowed money to buy farmland or buy farm equipment, or even the money to plant crops, right, for the season coming up. So WAD actually wasn't worth a damn.
So that was how, back in the day, we rated. So instead of a number,
that's right,
you got a WAD.
That's right. That's right.
Not worth a damn.
Poor Mr. Smith probably didn't
God, I love that.
Have any other loans with that lender. So so fast forward to, there were Credit Data Southwest sprinkled all over the country. And, they had these data gatherings of how people paid their financial obligation, whether it was farmland, farm equipment, an auto, right? And then we started to build more robust data gathering, if you will, processes. And at the time, TRW was space and defense and automotive. And so they had the technology to take these cards, essentially, that you would call in, an operator would answer the call and read off the information.
It'd be like WAD for Mr. Smith.
That's right. That's right. So it became more automated. And this in the 70s was, Equifax had different bureaus that they acquired, TransUnion. So each of the three bureaus, which is today Equifax, TransUnion, and Experian in the United States, they started to acquire and accumulate and gather and aggregate all of this data that came from different lenders into what we know today as a credit report.
Oh, wow. Well, that's pretty cool. I love the WAD.
Yeah.
Worth the damn. So then from there, so now you have your credit reporting. Now, for some people, this is my opinion. So credit reporting is, to me, and this is how I explained it to my daughter, it is more important than actually having money in this country. And I've thrown you for a loop here, but we touched a little bit of base on this in terms of like how valuable that number is and being able to do things. If you have a low credit score and you need to borrow money, it's hard to borrow money if you have a low credit score. Am I correct on that statement when I say that?
It is. And, credit scores, again, let me take you back through a period of time to understand why credit scores are what they are today. You know, when I got my first auto loan, I borrowed $1,000 from First Interstate Bank to buy my 1971 VW Bug.
Ooh, that was your first car?
Oh, I loved
I didn't know that.
Oh, I loved that car.
Did you have that when you went to high school?
Uh-huh.
Okay, why didn't I hang out with you?
I don't know.
Okay, sorry. I digress. Go ahead. Back on topic.
So we went to First Interstate Bank, and I think it probably took a week or two to get a decision. And before credit scores, it was a manual process. And let's be frank, it was probably a little judgmental based on the person sitting behind the paper making the decision about whether or not to lend to you. Very difficult for women to get any kind of a loan because they were not working typically. So
you don't have a lot of credit to show.
You can't give someone a loan without their husband's permission, right? There's all these layers
that's so gross. Sorry.
But what does it do? It creates a biased decision process that is today very hard to justify legally, and fairness, all of it.
So now it's very unbiased, is what I hear you saying.
It is
goodness.
Yes. And so if you think about what's in a credit report, right, there's some personal identifying information, which anytime you apply for credit or when a credit grantor is reporting data to the bureaus, it's reporting your name, your address, your employer maybe, and your social security number,
and that's
right?
it.
That's your identifying information. Right. You have public record data, right? So that comes from the courts. It could be tax liens. It could be bankruptcies. Judgments that are filed against a consumer. And then there's the actual what's called trade data. So that can be auto loans, mortgages, anytime you have a financial obligation, but it can also be collection accounts, right? And so that is the makeup of the credit report that the scores primarily use to determine, without actually sitting down and looking at it, it is using data, history, how long have you had credit, what kind of credit do you have, how do you pay the credit that you do have, how maxed are you, right? What is the utilization of the credit available to you? It uses an algorithm that's based on all these different data points to come up with a numerical value that is statistically proven to say the people that score with this range have an X percent of likelihood they're going to pay back.
Right.
And the bottom line is there are lenders out there that will still lend to people that don't have good credit, but you pay more
in
for
interest rate. Right. Yes.
Now, thank goodness, the CFPB, the Financial or Consumer Financial Protection Bureau, came into play, I don't even know, probably early 2000.
Okay, yeah.
But essentially, there's a lot of scrutiny around predatory lending. Right.
And that's a government agency, by the way? The consumer. Okay, that's what I thought.
And with any government agency, with all due respect to anyone in the CFPB or any other entities, right, scrutiny can be a very delicate line because you want to protect consumers, but you want to protect it in a way that banks are not penalizing consumers because it costs so much money to have to comply with some of the regulatory scrutiny and different regulations that come down the pike. So, but I will say in my time at Experian, I really have seen the industry evolve where, consumers are first. What I love about Experian is, from the products that we sell to lenders to the products that are available direct to consumer, in Equifax and TU, all three bureaus play in the space, but it really is the consumer first. And I think the shift that I've seen, at least in the last, I would say 5 to 10 years in my career, is really helping consumers be educated.
Okay.
Because
I like that.
Like anything, right? And so there's, hundreds, if not thousands of podcasts. But you have to do your homework to understand, having good credit, you have to work hard to maintain good credit, but you have to be aware of what's in your credit report. And so educate yourself. You don't just show up and have good credit, right? Parents out there, please talk to your children at an early age about mom uses a credit card every time I see her go to the store.
Right.
Have a conversation about what that means, right? I have my cousin and his wife. I remember years ago we were at dinner and she makes her son, which I think was probably in his, I don't know, I don't have kids, so I'm thinking 9, 10, like he was young. she would have him sign the credit card slip so he understood how much the meal was.
That's perfect.
How to calculate a tip. Why are you tipping 20% versus...
Right.
It's brilliant.
Did she show him the bill afterwards, like when it came in the mail 30 days later?
Absolutely. So tying it back
factor.
to here's what we're paying for dinner, right? But absolutely understanding that this money is coming from this account where we are spending it because we have it.
Right.
We don't use this if we don't have the money to pay for it.
Right. And that's the key thing. So credit cards are a wonderful thing if you know how to use them right. So you got to have great credit to get a nice credit card that has all these wonderful features.
Yes.
But in order to maintain that, if you charge that credit card, you also need to make sure that you pay it off every month.
Yes. Agreed.
Or you're not going to have that. Okay, that leads me to another question that I want to ask you about credit scores. I love the fact that you're saying that, the government, that consumer agency has gotten involved in the early 2000s, so they're protecting consumers. So there's no bias in credit reporting according to the algorithm that we have. So I love that. Another thing I'm finding interesting is that we're hearing about insurance, homeowners insurance. I don't know if you can talk about this, but homeowners insurance, like they look at your credit score now and based on how much you pay for your homeowner insurance. I don't know if that's something that you're, versed in, talking in, but I was really surprised about that. Like that can affect also your homeowner's insurance policy, your credit report.
Yeah. So I won't get too much into it because there's a lot of detail behind that.
Yeah.
Anytime you get insurance, there's an individual that their job is to just quantify, it's an actuary, right? So whether it's car insurance or anytime you're underwriting, you have to assess many data points to determine.
And credit's one of them.
Credit is one of them. And it's more, if you think about credit is a financial obligation, which is a definition of character. How do I manage my money? How do I pay my bills? So when people talk about credit, whether it's used for underwriting or, some tenants and landlords pull a credit report, right? It's just another data source that helps people understand
make an educated decision, basically.
That's right.
Like, who is this person? Are they going to pay, I'm going to put myself on the line or rent them a house. Are they going to, pay for it? So that's just a point of reference. But is it safe to say that if you don't have a good credit score, it can be hard?
100%. And I try to be really mindful of this topic because, the reality is people have hardship and people have difficult times, right? And you get divorced, you have a death in the family, you're a single parent, you're putting a kid through college. The list goes on and on. The reality is it starts with education, and having good credit takes a lot of, you have to be continually thinking about the responsibility that comes with borrowing money. And, not everyone can go out and get a credit card. And again, I think there's been just a tremendous influx of lenders, companies that we call them neobanks, that they're, you don't have to go into a traditional branch of a bank to get credit anymore, right? And so there's a lot of, Self Financial was a company that I worked with. And I remember meeting with the founder, and he was talking about, he and his wife went abroad and did work out of the country, and they were gone for several years. And when they came back, they didn't have any credit activity in the United States.
So they couldn't. So their credit went down.
Yes. And so they actually, I think it was like she was in graduate school or whatever, but he founded Self Financial. And if anyone's listening to this, it's not a paid endorsement, but it's a fascinating story. Right. And most founders of any startup, have a really personal story of why they do, right?
But so they started it to help people who don't have credit get credit?
Right. Build credit.
Okay.
And there's a variety, including Experian. There's a variety of companies out there. So, I could go through the list.
There's many products out there. Yeah, there really is a lot of products because now that we have credit reporting and it's been around for a while and, it's considered to be, an unbiased entity, you have all these products, which leads into fraud. Right? Fraud is a huge thing. And we were talking about victims. So it's like, yes, at the end of the day, if you have a low credit score, it can be crippling if you need to borrow money. 100%. It's a number. It's a black and white number. But the question is, why is that number low? Right?
Yeah.
And so sometimes it can be very unfair. It could be a medical bill. It could be a victim of fraud.
Right.
So how are credit unions dealing with that now? And how can a consumer protect themselves?
Yeah. So, fraud. So when I was at Experian, I actually was in our fraud and identity division, and for many years in sales, and I was always fascinated by just the amount of technology and data that goes into protecting us every day from fraud. And fraudsters are smart, right? And unfortunately, rewind the clock 20 years ago. I mean, somebody would steal your wallet and go use your credit card, or maybe try to apply for a loan using your driver's license or whatever. That's for amateurs.
Really? This is interesting.
The fraud that happens today is, I mean, you see it on the news every day, right? It's cyber, and a lot of times it's like some 15-year-old just trying to see if they can hack in. And then there's the dark web. And the dark web, they sell all the data that's compromised and whatever. At the end of the day, fraudsters are smart. And if they could just put it to good use, we would be a better world.
Wouldn't it be?
Here we are.
So talented. It's so talented.
It's insane.
But they're using it in a way to hurt our society.
Yes. And maybe that's an overstatement. I mean, some of it is just to see if they can do it. Yeah. Can I break in, right, to this system or this, secured environment? But back to your question, if you, so one of the things that I have always, kind of advocated for, whether it's friends or family or for me personally, is you have to know what's in your credit. So you can get a free copy of your credit report. Through
free copy. I like that little smart shopping deal. You don't have to pay for it anymore, guys.
I know. So the bureaus have offered for years through annualcreditreport.com, you can get one free copy of your credit report a year.
Is annualreport.com? Is annualreport.com or is it freeannualreport.com, the website?
It's annual.
Thank you.
Creditreport.com.
Okay. Thank you.
But and you can space it out, right? If you get one per year, and most, all the bureau data these days is pretty much the same. So do your Experian in January, Equifax in March, right? Space it out.
Okay, so you get one from each credit bureau per year.
That's right. So, but I also encourage people to get some kind of credit monitoring, because the thing about being a victim of fraud is you're either getting a call from the bank,
right? It's already too late.
It's already
Sorry,
too late.
I didn't mean to.
No, you're right. But that's the thing about fraud is and now a lot of fraudsters get your data and then it sits dormant. And all of a sudden, 2 years later is when you start to have the issues.
So credit monitoring is the key thing.
You have to be diligent and on top of it. But to your original question, I mean, if you've been a victim of fraud, the bureaus are really great about, you can add a fraud victim statement.
Okay.
Lenders are aware that this happens, right?
Okay,
They're
good.
looking to protect people every day from bad actors coming in. But you can add a victim statement to your credit report that, it doesn't automatically just get approved, right? Somebody will say, call this number, et cetera. And you can work with the bureaus to remove any data. The lenders are so good right now, I would say, about fraud victim assistance.
Yeah.
And so, if somebody opened a Chase card in your name or they took over a Chase account, work with the lenders, right? But as soon as you think you have been a victim of fraud, get
on it, don't ignore it.
Get something on your credit report. It's called a fraud victim statement. You can put a 90-day temporary, or you can put like a long-term freeze, depending on the extent of it. But going back to the credit scores, the ability to dispute a lot of information because it's incorrect that's a consumer right. And all the bureaus have to adhere to that. But again, the bureaus get their data from lenders, right? The bureaus have data compiled, but it's coming from a data furnisher.
They're just an aggregator, basically.
That's right.
Credit bureau agencies are an aggregator of data, and they spell it out so you can make a decision. They just spit out a number. They're not the ones putting the data in there. That's the activities that you're doing and the people that you're borrowing it from that are doing that.
That's right.
So when you have an issue, you have to go to them.
Yeah, and the credit monitoring is kind of like a way to keep a pulse on your credit report, right? Rather than looking at it every day. There are so many services out there. In fact, my last 5 years at Experian, I worked for the division that would basically enable companies to offer credit monitoring, either through us or they, we call it white labeled. So they basically would create their own product. There are a ton of companies that offer it at no charge to consumers.
Okay.
So I don't want to endorse any specific company, right?
But I get it too.
Yeah.
Because there's so much fraud going out there that it's bound to come across your desk that you've been part of something that's been compromised. And usually those companies offer free credit monitoring reports. I think I still have one from recently. There was a big, huge fraud, and I got an email about it, and I signed up for the credit monitoring. So.
They have to, yeah. So when there's been a data breach, companies that have been breached have to offer that to consumers. And it's become a little saturated because you can't, and I think people have become a little immune to it, right?
Yeah,
and so they're...
because it's so much.
Yes. But I will tell you that there are a lot, I mean, whether it's your your cell phone provider, your auto insurance, like there are a lot of companies out there that offer credit monitoring, very robust packages. So if you do not have any kind of monitoring, I would definitely start to snoop around with, whether it's like your AAA membership or your Amex Platinum card. Like there are a lot of different avenues. Now you're not automatically enrolled, so there's a little bit of effort on your part to get the service going. But
so could you just Google free credit monitoring and maybe find something from there?
You could, but like Google, it's paid search, and whoever pays the most is going to pop up first, and that doesn't always mean it's the best service. So do your homework.
Okay,
there's consumer reports out there. You can do your homework to understand what the best.
So key thing here, Renee is saying, is make sure that you're staying on top of your credit. You need to monitor because there's activity going on every day. Somebody can get a hold of your information. Somebody could accidentally report something. So stay on top of it. Free monitoring services. Now, let me ask you a question here. This is kind of one of those questions in terms of I'm a consumer. So being that I was a consumer reporter, and I still am, I'm always, making sure that consumers are educated and making the smart decision about spending their money. One of the things I always tell people is do not use your debit card on the internet. Do not use your debit card for online purchases. Am I correct in saying that, Renee?
Yes.
And why?
Preach. Because debit card is, on one hand, a smart way to spend money and not get in debt because you are using a debit card that's automatically debited from whatever account it's tied to.
And it's taking your cash.
Right?
You're not using credit.
So that makes sense. The problem is if I am a fraudster or a bad actor and I now have access to your cash, that's not a good situation.
Not at all.
So I have a fit. One of my very dear friends uses her debit card when we go to...
It's probably the same friend, but we won't mention names.
So, and I'm always
yep.
But yes, so do not use your debit card. And it's hard, right? Because if you can't get a credit card, it's your only option. So I encourage you that if you are making a big purchase, if that's the only means, you're doing just fine. But I think if you are making internet purchases anywhere that you are using access to cash, you're vulnerable.
Right.
Not to mention the fact so many credit card companies are on our side when it comes to fraud.
Big
right?
time.
So, even the gas station, right? Somebody can come up right behind you and
steal
read
your number.
It's just, again, if these people could put this knowledge to good use, we would be a better world. But
oh, yeah. I'll tell you. So that is great advice. I agree with you. I'm so glad that you said that because I cringe too when I see people go to a restaurant. It's like the debit card. And I'm like, I don't want to drive people crazy, but I want to protect the people that I love. Don't use your debit card because if somebody gets a hold of that account, that's your cash and you have to fight with the bank to get that money back. But if it's a credit card, it really gives you an extra layer of protection because they've just taken credit, not your cash, because you need that to pay your bills.
That's right.
So I love that.
Well, and the other thing, if you're trying to build credit, debit cards don't report to the bureau because there's no financial obligation because the money is automatically debited. So, one of the things going back to credit scores is you have to have activity in your credit report because again, it's an algorithm that's based on data points, both, current state and history of. And I always laugh when people are like, I don't use credit. I pay cash for everything. And I'm like, well, that's great.
That is great because you're not in debt, but
if you're going to go apply for anything major, you have to have some kind of current activity so your credit score reflects how are you today, right?
Right.
The credit score doesn't know that you've got $10,000 under your mattress and So I know.
Yeah, we have some old school people like that too. But yeah, you just got to find the happy balance. And, with young people, you're just getting out in the world, 16, 17, 18, you don't have any credit history. Hopefully there are parents, there's resources, the library that can teach you. I know Budgetista on Instagram is a great one to follow in terms of like building up credit and how to respect that too.
Yes.
And that was the other thing that we talked about in the first episode podcast was respecting money.
Yes.
And finding a mentor
Yes.
that you admire how they use their money to use that. So some good stuff there, Renee.
Yes.
Well, I think that's going to be a wrap. I think you did a wonderful job in educating us about the credit history and all of that. And I can't wait to see what your next move is going to be. We'll be looking forward to that. And I would love to have you on in another time and see where Renee lands, because being VP at Experian was quite a great job. It was a great job. So I'm looking forward to the second half. Okay, so that's it. So, you guys probably won't need to get a hold of Renee because Renee is just around the world and she's just giving us great advice. But I will have an article written up about the great advice that she gave us. Post on my blog at smartshopperdaphne.com. And don't forget, I'm Daphne Monroe, your smart shopper. I'll see you next week.